for a Sri Lankan consumer, life insurance has always been part of their discretionary spending bucket. And in most markets, it is part of your essential spending bucket. So that is the transition that we need to make as a country, as an industry.
So still globally, it's less than 10%. However, during COVID, we saw double-digit growth. People's behaviors are changing, so we continue to invest on our digital online channel as well. And that's a long-term view we take. Another interesting area that we are investing is connected insurance.
I think one of the silver linings of COVID, we were given no choice but to sort of embrace digital more quickly. So with that, you're able to sort of meet customers where they are, because you find especially the Gen Zs, they are now on the digital space.
Hello, you're with Echelon's Turning Point, and we have a panel from Union Assurance today discussing delivering the true value of insurance. And the panel in the studio consists of Senath Jayatilake. Senath is the Chief Executive of Union Assurance. We also have Harsha Senanayake. Harsha is the Chief Information Officer at Union Assurance. And we have Wathsala Aluthgedara. Wathsala is the Chief Partnership Distribution Officer. It's great to have you here at the Echelon studio. Let's start with you, Senath, right? The last several years have been tumultuous for Sri Lanka because of several crises that we had to face, right? How did life insurance perform, and how did Union Assurance do in this time frame? Considering that you're exclusively a life insurance provider.
Sure. Thank you for having us. The life insurance industry has persevered throughout all these challenges.
Sure.
If you look at the industry's CAGR over the last couple of years has been double digit.
Right.
And industry is now over 150 billion rupees in terms of gross written premium. So that goes to show the strength of the industry and also the potential in the market for life insurance. Union Assurance has been growing quite strongly over the last couple of years, and we have exceeded market growth rates. And that is because of our value proposition evolving with times, our focus evolving with times, and the changing needs of customers, especially given the journey this country has taken over the last couple of years.
So you said value proposition changing with time, focus changing with time, and the changing needs. Can you expand on that? What was that opportunity, and how did you respond to that?
Right. So we as an organization, we constantly strive to drive our business with a holistic value proposition across all our stakeholder groups. So our primary stakeholders being obviously our policyholder, our shareholder, our distributor, and our employees. And in terms of our policyholders, we have continuously expanded the range of protection solutions that we offer. It may be from health, retirement, protection enhancers, etc. Just to ensure that customers can meet their protection needs continuously, given the current context. Because as you know, the need for protection has increased significantly in this market as household savings has dwindled with hyperinflationary environments.
So it looks like, Senath, you're also offering basically kind of blended kind of policies. They are life insurance policies in large, but they have elements of general insurance in them.
Well, they have extensions of protection. Life insurance was traditionally known as a doomsday solution, right? It was known just for its death benefit, but it is just more than that. Like, life insurance is about giving you the ability to live your life to its fullest by securing your financial future. Essentially, that's what life insurance is all about. And we do that by going beyond traditional death benefit based life covers to giving you ability to enhance your savings journey, to plan your retirement, protect your health needs. So it's a entire ecosystem of solutions blended together with a life cover.
Right. And I'll bring you in, Harsha, right? I think one of the factors that you as a company in general would have been grappling with over the last several years, particularly in the last 12, 18 months, is the rapid increase in costs, right? True for all businesses, right? How is technology part of a solution in operational challenges, particularly around costs?
Sure. I think in terms of cost, we saw that due to IT cost, mainly depending on the USD. So overnight, we saw the cost doubling. So that has been a challenge, across the board. But I think the efficiencies that the technology actually brought in, over the last 37 years of a company's existence, we have seen our advisors, using notebooks to calculate premiums. So that has transformed now. UAE is, one of the first companies to have 100% digital submissions 10 years back. So we have seen those efficiencies and our agents to really, service our clients digitally, using those tools completely paperless. So we have seen those efficiencies that allowed us to scale. So, while the cost is a concern and we see that economies of scale can definitely help our growth, but the cost efficiencies and the customer experience that the technology brings in really, justifies that investment that we have made over the years.
Wathsala, let me bring you in here. You are looking at the distribution, the channels and the distribution, bank assurance just being one of them, right? When you look at the challenges in front of you, right, how do you fit technology into that? Cost may be one challenge, but that is not the entirety of it. What are the challenges in front of you, and how do you find, what are the solutions you're looking at?
Okay, Shamendra. So let me answer it this way. If you take insurance, the traditional way of selling insurance is through an agent-led model. And Union Assurance has a fantastic agent-led model, which is very strong, which contributes still to a larger part of our revenue. But what you also see in the more mature markets where the life insurance penetration is at much higher rates is that they are now shifting to non-traditional kind of diversifying their channels. So purely because it sort of enables them to reach more customers and also manage cost. Right. So bank assurance is one of those channels. So that is basically where customers come in for your financial needs into the banking system, banking network. And through the network, you are able to sort of create awareness about insurance products and sell those products to them. And like Harsha said, digital space, I think, is also one of those areas that we see as, one of the channels that are really picking up. And I think one of the silver linings, and I keep saying this, of COVID, I think is where, we were given no choice but to sort of embrace digital more quickly. So with that, you're able to sort of meet customers where they are, because you find, especially the Gen Zs, they are now on the digital space, and you can sort of interact with them. You can give solutions. It's convenient for people. And like Harsha said, it's a very cost efficient model. So I think that's why a lot of the companies are also embracing, and that's why Union Assurance is also really investing behind technology, because we see the potential that it has.
In the industry, there's been a push to diversify distribution from the agent-led model, or the sorts of people that go around selling life insurance, right? If you have a KPI of diversifying distribution, right? Tell us about, what are those goals and how are you crafting a strategy around diversifying this distribution?
So diversification, I don't think it's something which is limited to insurance. I think for any industry, the diversification aspect is important. What it does essentially, it reduces the dependency that you have on, say, one particular channel, right? And that's always a good thing, because you can't have all your eggs in one basket. So I think that is like a very simple, straightforward kind of reason as to why people diversify into different channels. And the other being the reach, because again, with the traditional models, while you go out there, you meet customers, your reach is still limited. But when you partner up with, banks, when you partner up with non-banking financial institutes, telcos, you are opening yourself up to much larger consumer base. So you're easily able to, interact with them and really sort of create awareness and, drive the benefit of life insurance.
So, Senath, you're investing in technology and you want to see, I suppose, a shift in, amongst other things, a shift in how you're selling insurance, right? What's the sort of vision or what's the sort of number that you would really love to chase as a company in terms of the mix of channels that feed into your gross written premium?
Right. So when we talk about diversification, and diversification is all about creating reach and making insurance accessible. Today, life insurance in Sri Lanka is less than 1% of its GDP. We are trailing far behind regional peers.
Sure.
This market, this country is heavily underprotected. So in essence, sky is the limit. But we as an organization, our focus is, whilst we reach our goals, whilst we reach our top line numbers, our bottom line numbers, is also to make insurance more accessible. And that is what diversification does. It makes insurance more accessible to all segments of customers. So as I spoke about, I mentioned that we constantly evolve with the need of the customer. That need is not just product, but it is also how we get the product to the customer.
Harsha, if I can bring you in, right? Can you talk to us about where you're deploying technology? Now, surely in diversifying your distribution, that's one area of technology deployment. But I mean, you are a fairly large company. There must be several areas where you need to get your technology right. You can't have technology working well in just one area. What are these areas and how are you doing with
Sure. I think large portion of business still comes through our channels, existing traditional channels. So there is a huge investment made in how we can really improve and give the right tools for our agents to give the right advice. So that's a investment in what we call bionic agency strategy. So that we continue to invest in. And while we do that, direct to consumer is also growing. So still globally, it's less than 10%. However, during COVID, we saw double-digit growth. So people's behaviors are changing. So we continue to invest on our digital online channel as well. And that's a long-term view we take. Another interesting area that we are investing is connected insurance. So we want to go beyond the traditional insurance product where we connect your wellness data, your fitness tracking, and to create a much broader value proposition to reach the dynamically priced products based on your health data. So that's something that we have been investing through our platform called Click Life app. So that has been a really innovative area that we have been continuously enhancing on.
So that will help you ideally sort of bring some element of dynamism to the pricing, right? You reward those who have a better lifestyle.
Yes.
When you're building this out in a market and trying to distribute in a market like this, what are the challenges that you face and how are you dealing with those things?
It has been a challenge, getting people to change behavior has been a challenge. However, we were one of the first steps to reach, 100,000 downloads. So we were competed with Google Fits of the world, but we managed to get the right sort of customer base engaging with us, but that's not easy. So it has to be backed by as you said, rewards, the incentives to motivate people to change behavior, and it will definitely reflect with our claim ratios, etc. in the long term. So it's a long term investment we are making, and I think it's we have seen global players or employing similar strategies. This will be common feature that life insurance company will be offering.
Sure. Wathsala, in your role of partnership and distribution, really, right? What are the demographics, income related or other trends that you're seeing And how are you sort of adapting the strategy that you have as a company to be able to meet those challenges or those needs in the market?
As a company, I think we invest and we sort of focus on fundamentals. So we believe that the customer or the consumer is at the heart of what we do, because at the end of the day, we sell our insurance products to them. So we have to have a very good understanding of who we are dealing with, because if we don't have that understanding, we can't really sort of cater to their needs. And today, Chandra, you will know that the landscape is changing, and it's changing rapidly. And, you have so many choices. People have so many choices. So unless otherwise you sort of have a good pulse about what's happening and you're able and ready to quickly serve those needs, you will basically miss the opportunity. I think what we sort of focus on is really concentrating on different customer segments, trying to go in depth to understand each of those segments that, we currently cater to, as well as, possibly segments we want to get into, more so that we can actually come out with products and propositions that can cater to exactly what they're looking for.
Sure.
Because the more you personalize, customize to meet their financial goals, lifestyles, protection goals, the better uptake, because they feel that it is a right product for them. So we've moved away from the one size fits all kind of strategy to a very customized, personalized strategy. And to do that, we really need to understand and have a deep understanding of the customer. So that is something that we focus on throughout.
And I suppose younger customers, Gen Zs in particular, will appreciate a personalized product that sort of seamlessly integrates with what they want to do or expect out of life, right?
Yes. So I think Gen Zs, what research has sort of indicated to us is, contrary to maybe the mature segments being a bit unaware about the need for insurance, the Gen Z actually, they're aware of the need for protection, right? So I think it's about sort of bridging that gap and making it more accessible and in the way they want it. Because it's not about they wouldn't probably want an agent to contact them, or they wouldn't possibly want to go to a bank. But if it's available, ready, the interaction is good, the experience is seamless digitally, I'm sure, we'll see the penetration levels in those demographics really, exponentially growing in future.
Senath, if you manage to grow better than market, so obviously you're doing something right, and that's a reflection of your strategies of the past several years, I suppose, right? But from where you are, you as leader, as CEO, you are new to the role. You have been with the business obviously for 4 years. What do you think are the 1, 2 or 3 things that you need to get right to maintain momentum that is better than market rates of growth?
Right. I think the primary focus has to be on customer centricity, because insurance is still perceived as a product of confusion. Right. So there has to be more simplified distribution and awareness creation around insurance, especially life insurance.
Sure.
And that is part of our strategy of diversifying our distribution. That is part of our strategy. We adapt to make insurance more accessible, and also giving the customer more control of their insurance, because life insurance is a deeply personal product. It's not a one size fit all product. So giving the customers the ability to pick and choose how they want to design their insurance cover, how they want to purchase their insurance cover, how they want to experience their insurance cover is a core focus in our strategy. So customer centricity, and as we have been talking about, distribution diversification and creating great accessibility are 2 key fundamentals that we drive as part of our organization strategy.
Right. You're also operating in the environment that we are in, right? So we've seen a lot of significant volatility in interest rates. You will be running a large investment portfolio, so you will have an eye on what's happening out there in the market, particularly with regards to interest rates, and you have to make strategies, decisions, choices today that have ramifications in several years forward from now, right? How are you approaching the current levels of volatility on interest rates, inflation, and stuff like that? Although they have settled, but you have to take a position. How have you approached this?
So given the fact that we are in a long-term business, our investment strategy is centered around long-term value creation. Because our core proposition given to customers is long-term value creation. So we consistently look at long-term value creation, deciding what we invest in, how we invest in, and what return we expect. And that is why we have been able to consistently outperform the market in terms of the dividends that we give to our customers. So whilst we provide a superior protection, we also need to provide the customers a superior return in the long run.
Sure. Harsha, we've talked about customer centricity, right? At the same time, customer centricity can also come about if you have your backend systems working very smoothly, so that they feed the data, your interface, either with customers or with your sales agents, right? It is the backend that feeds the data, right? What's the sort of technology and improvement that you've had to do in the backend to make sure that customer centricity remains and is a goal that you are hitting because of your sophistication?
Sure. I think most of the insurance companies actually faced this challenge since we have been operating for very long years, and we are really saddled with these legacy systems. So we completely rehauled our entire core insurance platforms,
right,
to the back office functions. So that was done about 5 years back.
Right.
So we are completely on modern technology platform, which enables us to deliver the right sort of digital capabilities for our channels.
When you say rehauled, I suppose you moved to the cloud then 5 years ago? Is it?
Yes, that's right. And including modernizing all our point of sale technology to our back office, the core insurance solutions, and it is based on complete micro services architecture. So that work was done. Plus, we have also invested in advanced analytics technology capabilities. So we were one of the first companies to do that, and we are also backed by the John Keel's advanced analytics team. So we have a large pool of data scientists and data engineers who we work with to develop some of our churn prediction models. We also develop product recommendation engines, as well as into the future we see AI playing a massive role, and potential disruption it can have on our industry. So we are geared for that as well.
So how would you build that into your strategy? If this is something that's a reality today and likely to become even more prevalent in the future, artificial intelligence, what's the sort of value that it can bring an organization such as yours, a life insurer?
So certainly, back office like say underwriting or claims assessing capabilities now can be automated to a greater extent.
Right.
That AI capabilities there now. So we will be enhancing further where there can be humanless underwriting capabilities. That's something that we are investing in, and we have been investing. And into the future, say 5 to 10 years horizon, we also see the potential of robo advisors who can advise customers on potential products, as well as diagnostic capabilities of medical records, being able to now cancer detection through technology like AI vision. So these can also help us to price our products better, detect these during underwriting stages. So that can potentially change the way we sell our products and interact with our customers.
Right. Wathsala, you'll have to be very innovative, I think, if you want to change also your, how you sell your product, how you diversify distribution, right? Can you talk to us about what you've done well in the last few years in terms of innovating in this area? And how do you plan to, keep shifting that balance to diversify?
If I take bancassurance as a channel, I think, like I said, Shamindra, earlier, it's about being customer-centric and understanding the customers, because my needs are not your needs. So we really need to deep dive and understand that. And once we have that understanding, it's a matter of, we have a plethora of products that are with us, right? And these products have been developed with, so much of research going into them. I think where we can innovate is, like Senath said earlier, it's not about, you having a product and then sort of, being forced to buy into that product, even if it doesn't meet your needs. By having these products, it's almost like a plug and play. So wherever possible, depending on your needs, it's about plugging, A, B, C, D products together and creating a more customized kind of solution that caters to you, your personal requirements. So I think from an innovation perspective, that's one angle. The other is, I think we are constantly also looking at industry best practices and looking at areas where we can innovate and create new propositions for our customers. So, that's constantly something that we do because you see the more mature markets, the Western, Southeast Asian kind of markets, they have incredibly innovative products that they put out into the market and targeting, different demographics. So, whilst we sort of plug and play and customize using our current portfolio, we are also constantly looking at, new products and how we can add more value to the customers. And bancassurance channel actually enables you to do that with ease, because once you've sort of cottoned on and figured out what the product is, it's a more simplified, trustworthy kind of channel, because you come into a bank because you have the trust and you know that you're going to get your financial needs fulfilled. And when an insurance product is also presented to you, your take-up rate, like I mentioned earlier, is going to be that much more because it's a simplified process. It is very bespoke and customized for your and tailor-made for your requirement. So people are also more confident in taking it on. So it's a combination of all of those factors.
Senath, you have the challenging job of not just coming up with this vision, but also making sure all these pieces, all these individual strategies align to meet and deliver something that you've imagined. But, everything has to align. As a leader, you have to align strategies, you have to align people to a vision, right? When you look at the landscape that we are in and the strategy that you have sort of articulated to your teams, right? What do you think as a company, what do you think you're really strong and doing well at? And where do you think you need to achieve even sharper alignment than you have today?
Right. So the strategies that we have for Union Assurance as a team, as an executive committee and as a larger team is really about disrupting insurance in Sri Lanka the right way.
Right.
That is, as we have been talking about, diversification, product innovation, creating more reach, and essentially building a purpose behind the strategy. People fall behind the purpose. A strategy needs to have a purpose and people will follow. And we need not just the support of our teams, we need the support of the community, the population of Sri Lanka to make this happen. Because as I mentioned previously, we are a heavily underinsured market with one of the lowest savings rates in the world. So potential for insurance and the opportunity for the community and the population of Sri Lanka to be a truly protected nation is huge. And that is that purpose that this strategy, our corporate vision and strategy is built upon. And that is what our teams fall behind and support to drive.
Sri Lanka has had some missteps, and as a result, we've sort of fallen as a country down in the leagues of, we are no longer an upper middle income country, right? But I suppose looking around, you can sort of gauge that maybe it's only a matter of time before we start rising up these ranks, right? How well do you think the company is prepared to seize that opportunity? Because penetration tends to improve as disposable incomes improve. Is it not true also of life insurance?
Yes and no. For a Sri Lankan consumer, life insurance has always been part of their discretionary spending bucket. And in most markets, it is part of your essential spending bucket. So that is the transition that we need to make as a country, as an industry. Union Assurance, for example, has been in this business for 37 years. And this country has gone through many ups and downs, and the insurance industry has persevered throughout them all. So this is yet another challenge. And just as the country would persevere through these challenges, so would the insurance industry, so would companies like Union Assurance. So I strongly feel that yes, discretionary spending or increased spending power will help insurance for sure. But also the creation of, or rather the awareness of customers on the need for insurance will also make sure that insurance penetrations would increase irrespective of how spending power increases.
So I'm just curious to understand how you sort of analyze why Sri Lankans consider insurance not as part of their core, spending. What about our culture makes that the case here versus perhaps somewhere else?
I mean, there are several factors that really contributes towards this. As you rightly said, we are a dependent culture. We depend as kids on our parents. Our parents depend on kids when they grow old. So that dependent culture has contributed towards it. But things like this economic crisis, household savings rates coming down, and the expansion of nuclear families, all of these factors creates the need for households to be independently protected. They no longer have the luxuries or the buffers they had previously. And that is very important for us to understand and drive strategies around that.
Really insightful. Senath, Harsha, Wathsala, that's been a wonderful conversation. Thank you for joining Echelon.
Thank you for having us.
Thank you.